Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that while Trump is playing Putin's puppet, his lieutenants are setting the stage for a new global bout of stagflation. Higher tariff-induced costs for little or no economic expansion. Wall Street is starting to price in what is increasingly likely to lie ahead. The US dollar fell. US jobless claims came in lower last week than the week before, with all the decrease accounted for by seasonal factors. Markets had expected an even lower level from those seasonal factors, so this result was a disappointment. There are now 2.2 million people on these benefits, a rise when a seasonal decrease was expected. For most of 2025, this level has been tracking higher than 2024. The regional Philly Fed factory survey expanded in February, but at a far lesser rate than in January. The fall-off in the new order component explains most of the change. Meanwhile, the Conference Board tracking of their leading index metrics shows a larger fall-off than expected and a negative outlook. Also lower than a month ago is the Atlanta Fed's GDP Now tracker. And we should also probably note the 6% fall in the Walmart share price overnight. It is dawning on markets that the new public policy settings are fertile ground for stagflation, inflation with no real growth. Retailers like Walmart are on the front line of that, and their latest outlook really disappointed markets even as they reported improved current results. Canadian producer prices rose rather sharply in January from December and were 5.8% higher than year-ago levels. To be fair, some of this is a base effect. The January 2024 level fell 3%, but the recent trend is higher too. Taiwanese export orders fell in January from December and came in 3% below year-ago levels. Analysts had expected them to hold last year's level. But to be fair, they did rise in local currency. It was the US dollar change that showed them dragging. In the EU, the consumer mood is improving, largely around the expectation that the ECB interest rate cuts will continue. Their sentiment tracking shows it at its best level for 4 months, and this survey came in much better than observers were expecting. But despite all that, it is still net negative and has been forever. China kept its February loan prime rates unchanged at their record low levels. And in Australia, their employed workforce grew by 44,000 in January, above what was expected, but less than the December gain. But there was a virtuous twist to this January level with a shift to full-time roles, with 54,000 more of them, and part-time roles shrank 10,000. Average weekly earnings rose 4.6% from a year ago, but high tax rates and inflation at 3% will mean most workers felt they just stayed even. And staying in Australia, the South Australian state government and the federal government have seized control of the Whyalla steelworks in Adelaide, essentially nationalising it. And they're having to tip in $2.5 billion to keep it afloat. Its British owner has a very chequered history. And we should also probably note that the key Aussie pillar bank NAB has seen its share price fall 15% in a week. CBA is down 6.5%, Westpac is down 11%, and ANZ is down 8% over the same period. Aussie bank shares are being re-rated lower, and because they're very widely held in Aussie superannuation and KiwiSaver portfolios, savers will notice. Container shipping freight rates fell 10% last week as the puff goes out of global trade, especially on trans-Pacific routes. These overall rates are now 26% lower than year-ago levels, even if they're still double pre-pandemic levels. But with weak trade out of China, these rates will likely fall much further and quite quickly. Although they remain historically low, bulk cargo rates actually rose 16% last week, although remain 48% lower than year-ago levels. The US Treasury 10-year yield is now at 4.50% and down 6 basis points from this time yesterday. And the price of gold will start today at just under $2,943 an ounce, up $15 from yesterday, and again close to the all-time high of $2,955 an ounce. And oil prices are up 50 US cents at just under $73 a barrel in the US, while the international Brent price is unchanged at $76.50 a barrel. And the Kiwi dollar is now at 57.6 US cents and up 50 basis points from yesterday. Against the Aussie, we're also up 10 basis points at 90 Australian cents. Against the euro, we're up 20 basis points at 55 euro cents. That all means our trade-weighted index starts today at just on 67.2. And the Bitcoin price starts today at $97,763 and up 1.7% from yesterday. Volatility of the past 24 hours has again been modest at plus or minus 1.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.